My first question is to Ms. Hewells. Has the economy changed your, as far as your investment practices go? The downturn in the economy, have you changed your policies or practices or backed off or anything like that?
We have not. We invest primarily in Midwest-based industrial manufacturing companies, and while many may think manufacturing has declined in this country, we find there are significant opportunities to invest in growing middle market, lower middle market manufacturing companies. We have not changed our profile. If there's a profile that's changed, it's really the availability of senior lending lending available to us. So what we've done is we've had to write a little bit bigger check and provide more of the capital because the senior lenders are typically providing less.
When you talk about middle range, what is that range?
For us, the middle market is a company with $7 to $100 million in revenues. Relatively small companies in comparison to some of the large multinationals we read about.
And my next question is for the lenders out there, and we can start with Mr. McGann. And it's the same question as far as your lending practices go in light of the economy. Have you all backed off? Have you increased? Are you requiring more from your
customers?
We
had a 12% increase in loan activity in 2008. And looking back at 2008, just briefly, we got off to a slow start, not unlike 2009 in terms of actual loan growth. We accelerated throughout the year, even through September into the end of the year of 2008, when obviously things started to cycle downward in the economy. 2009, we have had just moderate growth year to date, but I can tell you that our pipeline's growing in terms of pending loan requests. There was more activity in April in terms of new loans booked than we had since last September. So I'm encouraged by that. Our loan requests are down. It is a quieter time. Without question, I think there are a lot of borrowers that are reassessing whatever their business is. But having said that, we are gaining market share from other financial institutions in the Kansas City marketplace. Our underwriting, I get that question asked a lot. Our underwriting really has not changed. We feel like we have had a strong credit culture in our bank for many years. Certainly, we're more concerned about collateral values, and so we may, in fact, require, when you think about underwriting, we may well, in fact, require more money down on a particular project if it's real estate related, as an example. But by and large, our underwriting remains unchanged.
How about the credit unions, Mr. Haycock?
Yes, thank you. We have not backed off at all. We, as I said before, we wrote more SBA loans than any other lender in South Dakota last year, and it's continuing this year. As far as non-SBA loans, we had a record year last year, and it's continuing very, very strong. Credit unions nationwide, for the most part, have plenty of capital to lend. And we've had, I know locally, some financial institutions are not willing to lend to some small businesses. Also, they're changing some terms and conditions. They're coming to us. Oftentimes we can help them, sometimes we can't. But we're there and available and have the funding.
It's blank chip.
Yes, actually our loans increased just over 10% from 2007 to 2008 as well. But interestingly, our SBA loan percentages have been running about 2 to 2.5% per year of our total portfolio. This year, it's running 6.38. So we've really gotten behind a push to use the SBA program because what banks are facing right now is kind of a double-edged sword. You hear Congress saying lend, 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 but then the examiners are overreacting, and they're coming in, and we're getting stories of, all commercial real estate being classified. So, in my opinion, this is a prime and opportune time to use the SBA program because you can mitigate some of that because you have that guarantee, because the overwhelming majority of SBA loans will include, typically, at least in our portfolio, some type of real estate as collateral. So we really need to mitigate the the overreaction from the examining force, again, I think it's been stated today, there is an opportune time. The only other thing that I think would make the program more accessible in these times is perhaps raising the limits that we currently have on the size of 7A loans, and I think also on the 504s. So I think that would help a lot.
Gene, how about the development side?
Well, if you take a look at our national statistics, we saw record years in 06 and 07. 2008 fell off significantly, and 2009 is off again, at least in our own portfolio and the national statistics as well. We can't do a 504 loan unless we have a bank partner. I would say that when I look at my list of partners that are working with us on transactions, it does tend to be more of the community banks and fewer of the national lenders in that scope. Pipeline is starting to grow, but certainly not yet at a level to return us to where we were 2 years ago. And it's a significant concern.
Mr. Moore.